Hello guys, I'm going to be showing you how I was able to make $1,800 on a single trade on USDJPY. So if you are new to my YouTube channel, please kindly click on the subscription button to join the family, all right? So if you notice, I discovered price was on downtrend. So price created this and then came all the way to this particular zone. And they wasn't able to break this high, right? Yeah, came all the way to this particular zone, broke out of this zone. So price has made this particular zone a second hit. Then before price rejected, and if you notice, this is a supply zone on this particular zone. That price was supposed to come in and then before continuously going down. But price didn't tap in the supply zone. I noticed that since these buyers want to go more higher up to this particular zone, so price approaches down, break this particular low, telling us that this is a continuation of the sellers, right? Yes. Then price push on. If you notice, I marked out this high, and then price broke and retraced on it, pushed back, but wasn't able to break this high. So I'll mark out this high that price made. It wasn't able to get to this particular zone. Then price moved on, which I mark out this particular one because I was actually looking for an equal low, which is a liquidity before price would tell me that it's actually going up, which I marked out here, thinking that price will actually push up from here. Price pushed, broke, but didn't give me a nice retracement. You can see price was just going, no bullish move. And then I was actually patient. That is why whenever you are trading, you need to be very, very patient. A patient dog eat the fattest bone, you know. So you need to be patient to wait for the right setup to make your entries. So had it been I entered on this particular zone or I forcefully entered on this particular zone, I would have stopped out, right? Yes. Had it been without confirmation, I would have been stopped out. Had it been I didn't wait for a confirmation, I would have been stopped out here by this move as well. But I was patient to wait. I was actually waiting for the right equal low, which price approaches here. Give me a nice momentum rejections here. And then this is a bullish move. Price came all the way to this particular zone, tried to make this a liquidity sweep many people out that have entered the buy earlier. And then price approaches, this is a continuation candlestick, 1, 2, 3. And then push in back here. I noticed that, oh, it seems the buyers want to take in here. And price gave me a V-shape here candle, which is an engulfing candlestick. And then comes in, price was just moving. But I just have to take an entry at this particular zone. Put my stop loss here for a safer zone. I have to take my entry at this particular zone when price was moving up without coming down. So I have to take it here. And then my stop loss is the BT at this particular zone. So that in case if price should make a retracement, because it's not going to come here because here have been filled up, and then price will have to come up to this particular zone and then reject. Then I was actually targeting this particular zone. I was actually targeting this particular zone. So price came up and then closed Mariboso candlestick. So as price closed Mariboso, I was in profit. I was like, okay, Mariboso means price is going to continuously going up, right? Yeah, then I reduce my stop loss. This is when I reduce my stop loss all the way to this particular zone. And then I remove my TP target because I know that TP targets that this might definitely go very high because it has broken out this particular zone, and then with a Maribosa candlestick telling us that price is going up, and it has given us an equal low here from a liquidity sweep telling us that price is actually going up. I should be looking up for a buying opportunity. So I just have to put my stop loss a little bit tighter and then take off my TP. And could you imagine, before I was able to look into the chart, price have already gotten all the way to this particular zone. This is about 6.1 risk reward ratio. This is 6.1 risk reward ratio. Let me which I'll be showing you guys here. This is about 6.1 risk reward ratio. And this is the chart. You can see it. I made an entry at this particular zone during this Mariboso candlestick when it was going up. And then I have to reduce my stop loss all the way to this particular zone and then keep my phone after this Mariboso candlestick have formed. And then the next one push up again from all the way to this particular height. That was when I reduced my stop loss and then I leave my entry. I just took two entries and then I left it. Imagine you notice price went all the way to this particular height. So it's even higher than this. It went all the way to this particular height. And then if you notice, this is it. I was on 1,000 and then I made 1,855, which is by making two times plus of my capital on a single trade. You see it? And then this is when I stepped out. I stepped out at 1,877 dollar. Each one having $900. Each one might having $900, showing that actually this trade was a very nice trade. I didn't really expect that move so quick and so early. If you notice, price even went all the way. This was when I exited and exited about this is 7 risk reward ratio. 7.5 52 risk reward ratio. Very massive. You see, very massive. That's why you need to be very, 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 very patient. What I'm showing you guys is because I want you guys to be very patient. Because if to say I was not patient enough, eh, this move would have taken out my stop loss. This move would have taken out my stop loss because my stop loss would be a bit tighter, a bit below this zone. You see it would have swept out people's stop loss here. But that is why you need to be very, very, very patient, waiting for the right entry and time to enter a particular trade. When should you enter? When you discover that price has actually given you an equal low pushing up. So this equal low pushing up, it will have to enter back this particular zone pushing up, telling you that price is actually going up. You can browse this continuation candlestick. You see it green, red, green. So telling us that price is actually shooting back down. After it has swept people out, their stop losses telling them that they are wrong. People would have been taking sell opportunity here because it's continuously breaking out. See it taking out here. People think that, oops, this is a continuation of the sellers. Why the smart ones knows that price is reducing, and then right now price is changing character. You see it, reductions, you have to be marking at your lows. That's why you need to be taking trades at your lows and your highs. At your lows, you notice at this particular lows, price came in here. What happened? There was a momentum move. Price came in this particular zone. What happened again? There's a huge momentum move all the way to the up. Price came all the way to this particular highs. What happened? There's a massive selling. So a highs and a low is a very active zone that you need to be looking out for a buying opportunity or a selling opportunity. That is a point of interest. All right. Price always rejects or reacts at that particular zones. So whenever price breaks out, you notice price retrace on that zone and then continuously, if it breaks to the upside, it retrace and then continuously heading back. Like this high, you notice price broke it out with this momentum candlestick. What happened? It made a retracement, doesn't it? It did. And then price continuously heading back up. So this is it, guys. I believe you have learned something new as well from this video, from my entry as well. So patience is the best key you can apply in trading. And then apply discipline, wait for your setups before you can be able to take a particular trade. All right. So guys, if you're new, please kindly subscribe to my YouTube channel to join the family. So this is it, guys. Take care and bye for now.